The banking system. In October of 1907, Americans began rushing to their banks to withdraw money. However, having loaned the deposits out, the banks could not return everyone's money. This caused widespread panic, and many local and state banks and businesses declared bankruptcy. As a result of this economic crash, known as the Panic of 1907, the Federal Reserve Act of 1913 was created. The Federal Reserve Act was signed by President Woodrow Wilson on December 23, 1913. This act created the Federal Reserve System, also known as the Fed, an independent organization with some governmental oversight. The Fed oversees the nation's system of money and credit and is broken down into three branches. The first branch of the Fed is known as the Board of Governors. Chaired by Janet L. Yellen, the Board of Governors supervises the 12 regional reserve banks and helps decide monetary policy. Some examples of monetary policy include the buying and selling of federal bonds. The next branch of the Fed is the 12 regional reserve banks. These regional reserve banks do research on the economy and provide financial services to other banks and the U.S. government. The final branch of the Fed is the Open Market Operations Committee. This is a committee of the Federal Reserve Board that decides money supply and interest rates charged to banks. The overall goals and responsibilities of the Fed include printing money, keeping prices stable, promoting employment, controlling the available amount of money, and adjusting long-term interest rates. Before we go into the types of banks, let's briefly look at some of the different types of accounts that may be provided by these banks. The first account available is a checking account. A checking account allows you to get money out through ATMs, checks, and debit cards. Because of this, they are considered to have high liquidity. Liquidity is how easy it is to transform assets into cash. The next account type is a savings account. A savings account allows you to earn interest on the money deposited, but it is considered less liquid than a checking account. Then there are certificates of deposit, or CDs, which are certificates issued by a bank to a person depositing money for a specific length of time. They have higher interest rates than savings accounts, but be careful. You may be charged a fee if you take the money out before the designated time. Finally, there are money market accounts. Money market accounts earn higher interest rates than typical savings accounts, but they also have a larger savings minimum. There are many types of banks to choose from when deciding where to store your money. You may know of a few retail banks in your area already. These banks offer a wide variety of services, including checking and savings accounts, debit and credit cards, personal loans and mortgages. Retail banks deal with individual customers and businesses. There are also credit unions, which are not for profit, but that you have to be a member to join. Some member groups may include area, industry, or organizational groups. Credit unions offer many of the same services as retail banks, including checking and savings accounts, debit and credit cards, personal loans, and mortgages. Then there are online banks, which offer savings and checking accounts and debit and credit cards, but have no physical location. This means that all of your banking will be done online or on an app. Finally, there are payday lenders and check cashing services. Technically, these aren't banks, but they do offer financial services. Payday lenders will loan you cash before it's payday. Check cashing services will allow you to cash checks, but for a fee. With both forms, however, be careful, as they typically come with high interest rates and fees. Now, let's go through the parts of a check so that when it comes time for you to write one, you know exactly what to do. Some parts of the check will already be printed on there for you. These include the check number, routing number, and account number. The check number can be found in the top right-hand corner of the check. This reference number will help you keep track of your payments by check. The routing number can be found on the bottom left-hand corner of the check. This identifies the bank that issued the check. The account number is the number directly following the routing number at the bottom of the check. This number is unique to your account and tells the bank which account the money should come from. Now, when writing a check, there are some parts that you will have to fill in yourself. Begin by writing the date. Typically, the check will have date printed on it to designate where to write the date. If not, the line can be found at the top of the check towards the right side. You should then fill out the line labeled Pay to the Order of. This is where you write the name of the person or company who will be receiving the money. Next, you should write the amount, both in written form and in numeric form where designated. When writing it in written form, you start at the left edge of the line, and when you're finished, you will draw a line through the remaining empty space as far as the word dollar. You will then have the option to fill in the memo line. While it is optional, it will help you remember why the check was written and what it is paying for. The final thing you have to fill out is the signature. This is your authorization that the funds may be withdrawn from your account. If you are depositing a check, make sure you write "For deposit only," your signature, and your account number on the back of the check. Now, let's see how much you learned with a little quiz. True or false? Janet Yellen is the chair of the Board of Governors. You have 10 seconds. If you said true, you were right. Great job. Let's try another. True or false? There are 8 regional reserve banks. You have 10 seconds to answer. If you said false, you are correct. There are actually 12 regional reserve banks. Now, let's try some multiple choice. All of the following are jobs of the Federal Reserve System except A. Promoting employment, B. Adjusting long-term interest rates, C. Keeping prices stable, or D. Providing mortgages. You have 20 seconds. The answer was D as in dog. Banks provide mortgages, not the Federal Reserve System. Final question. Which of the following is not a type of bank? A. Payday lenders, B. Credit unions, C. Retail banks, D. Online banks. You have 20 seconds to answer. The answer was A as in apple. Payday lenders simply loan you money to hold you over until payday. As you can see, there are many different types of banks and services that are offered. So before you decide where to put your money, make sure you figure out which option is right for you.